Welcome to the Material Participant mini lesson as part of our real estate activity section of Teaching Tax Flow Real Estate Investor, the course. This mini lesson is very exciting. There's a lot of confusion out there with real estate investors and investors in general, what material participation means. We're going to walk through that, how it's different from a passive activity, and then we're going to actually look at some tax reporting and some planning ideas and how short-term rentals and long-term rentals are handled differently with material participation. So let's dive into our agenda. Talked about material participation, how it's an interesting concept. We're going to look at some of the rules. We're going to look right at IRS tax topic 425. We're going to look at a material participation test chart. So I'm going to walk through the different tests and actually tell you which one of the tests is typically the easiest to pass. Because in general, we want to have material participation in our activities. Then we're going to walk through Schedule E, which is where we report our rental losses if you're an individual or a single member LLC. And then we're going to have some calls to action. We're also going to look at that Form 8582, that passive activity tracking form for your tax return. So let's look at IRS tax topic 425. Under tax topic 425, you materially participate in an activity if you're involved in the operation of the activity on a regular, continuous, and substantial basis. Notice this can be somewhat of a gray area, but think about regular, continuous, and substantial. Now, the IRS, to try to unmuddy some of that waters, set up a set of 7 material participation tests, and we're going to walk through those. And the cool thing is you only have to pass one of those tests to have material participation. Now, remember, in order to deduct any type of loss, either in a business or a rental activity, you have to have material participation in that activity, okay? And even if you're rep status, which we're going to talk about in another mini lesson, material participation is very important to deduct a loss of any type. Well, we won't wait any longer. Here are the test types. There are 7 of them. If you want to pause this lesson to review them, no problem. But you could see that those 7 tests are very clear cut. There's one of them that's a little gray. Test number 7, based on the circumstances. Test 7 is a little gray. I would say out of these 7 tests, and my cursor's going across, the one for real estate investors that is typically easiest to pass is going to be test number 3. You participated in the activity for more than 100 hours during the tax year, and you participated at least as much as any other individual. Okay, so that's where you have that 100 hours in, but you also, there's no one else that's put more time into the activity than you. So again, a lot of information here. Please look at these 7 tests and determine if you pass one of them. Remember, you only have to pass one of these per IRS publication 925. So that's it. Just pass one of them. All right, let's jump into Schedule E for Joe and Jill Tax Flow. I'm going to talk through something called the short-term rental loophole real quick. So what you're looking at are 2 properties on the Schedule E. Joe and Jill have material participation in both of them. But one of them is a long-term rental. One of them is a short-term rental. And there's a loophole that if you have a short-term rental property that you have material participation in, then you could take those rental losses from the property, even if you don't have rep status or real estate professional status. And that's 125 Main Street in your example. Now, we always talk about tax flow versus cash flow, right? Both of these properties have a positive cash flow. But with the depreciation deduction, that's where a loss could be created. And again, if you look at 125 Main Street right here, let's look at column B on our Schedule E. You can see that loss is permitted because the taxpayer has material participation and it's a short-term rental property. You might say, how do I know it's a short-term rental property? On Schedule E, if you look at box 1B, right here, these property type codes identify what type of property that is. So make sure you review your tax return and ensure that if you have real estate investment properties, that type of property box is correct. All right, let's wrap it up. Oh, I'm sorry. Spoiler alert, we're not wrapping it up. One more thing, that 8582 form, passive activity loss limitations form. we're looking at this, you can see that Joe and Jill tax flow, they have one activity that's subject to the passive activity losses, that $1,500 loss from their long-term rental, and that carries forward. There was a previous loss here. I'm going to flip back to Schedule E. 125 Main Street, it is not a loss because of the material participation in the short-term rental loophole. So this here, Joe and Jill tax flow, have one property that keeps creating a passive loss, the other does not. And the other thing is on this 8582 form, prior year losses are here. Now we have another mini lesson on how we can utilize these passive activity losses, and we also have something called a hunting pigs mini lesson. All right, let's put a bow on this. First of all, make sure that you determine your material participation in each activity. All right, remember to deduct any type of loss, a business, a short-term rental property, whatever, you have to have material participation. Even if you're rep status, you have to have material participation in a property to take a loss. That's number 2. Review your tax return. And if you have short-term rental properties with material participation, you might be able to offset some losses on 8582 if they're miscategorized, or you might want to consider on number 4, performing a cost segregation study if you meet that short-term rental loophole. All right, thanks for watching and have a great rest of the day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.